Okay, so this is advanced accounting, and we are talking about the final account of companies. And we have decided to take past paper 2023 section A, part A of the Irish exams, or Irish curriculum. And we took the question from the phone, and they asked us to prepare a trading profit and loss account of the company. Now, the trading profit and loss account of the company is a differentiation between the incomes, which is the sales, the cost of sales, the administrative expenditures, and the distribution expenditures. It will give you the values of if the company made profit or made loss. But before then, there's what they call adjustment or workings. Why? Because there is always an additional information attached to the original information in the trial balance. So you need to reconcile those information. I've erased some of the informations, but I think like when you watch here, this is the adjustment made for the depreciation of assets of the company. Now, the depreciation of assets mostly works with the fixed asset. Like when you can see the delivery vans, we were asked to calculate 15% of the cost of the delivery vans. It means during the year, the van depreciated 15%. So when you calculate it, it gives you 22,500. Then for the land and building, which the business uses, they said we should calculate 2% of the cost. So it means for the year, they used 11,400 as depreciation for land and building. Then for equipment, we calculated on the net book value of the equipment. The net book value means it has been used for a period of time. Maybe it was used last year and the depreciation was reduced. So the actual value of the product for the new year or for the asset for the new year is what is known as the net book value. So 270,000 is the net book value for the equipment. So we calculated 10% of it to give us 37,000. So I tried to summarize. I said for you to effectively build this, you need to look for the retained profit after you must have paid tax. So let's just go straight. Then also for debentures, they ask us to make adjustment for debenture interest due. Whenever you see debenture interest due, check the amount paid for debenture, you check the period where the debenture was paid, and you check the percentage paid for debenture. So for this question, it shows that 140,000 was paid for debenture at a rate of 3%, and it was lastly paid in May 31st or in May 1st. And the accounting principle states that we start calculating from the last day that it was paid. So when you take May, June, July, August, September, October, November, December, it shows that the period was for 8 months. So what do? You take the amount paid times the percentage times the period. So when you do that, you give us 8,000, 2,200. So this is the amount of debenture interest due by the company. So this is our trading profit and loss account for regarding that question. This is the answer. What we do, the sales for that year is 750, and then there was sales return. What is sales return? These are items that were purchased by customers, but because of one or two problems, they were taken back to the supplier. So you have to reduce it from the sales return. When you do that, according to the question, it means the net sales for the company was 738,000. Now we come to the cost of sales. The cost of sales are the expenditures that are used to carry out the business or for the trading. So it shows that at the beginning of the year, there were goods that were left in the magazine. We call them opening stocks in accounting. So it's 47,200. Then during the year, they made purchases of 325,000. But these purchases, there was 2,500 worth of this product that were returned back to their manufacturers. So you have to minus this from this, and you add the balance to then you remove the closing stock. The closing stock are those products that are left in the magazine on the 31st of December 2022. So when you do this, it will give you 334,900. What do? You take the net sales, which is this, you minus it from the cost of sales, which is this amount. So it means net profit is 403,100. So, but don't forget there are other types of expenditures that were associated to the company's business. So there are administrative expenditures, there are distribution expenditures. So under administrative expenditures, of course, I wrote appropriations. They paid wages and salaries to workers, this amount. They used stationaries and printed documents, this amount. They paid charges for websites. They paid 44,500. They paid feed for the director 15,000. Insurance 16,500. Then depreciation values, which is what we calculated before. They calculate it like this and then they put it together. So this 131,650 is the amount used for administrative expenditures. So what do? You take the net profit and remove the value of the administrative expenditures. So we take 403,100 minus 131,650. It will give us gross profit of 271,450. Now we continue from here for distribution expenditures. And under distribution expenditures, we have to consider the depreciation of the value of van. So distribution van depreciated 22,500. Then there was an increase in bad debts because according to the question, provision for bad debt was made for 2,000, but for 2,100. But the percentage of bad debt, the actual bad debt increased, which is what we adjusted. Remember, I see what I do. I said adjustment for bad debts. Amount of debtors times the percentage minus the provision. So the amount of bad debts when we calculated it gave us about 4.5. Then, but the provision was maybe 2.1, something like that. So when we did the adjustment, it shows that bad debts amounted to 1,900. And the logic on bad debts is that if the value, if the provision for bad debts and the actual bad debt is lesser than the provision, it will be calculated as income in the balance sheet. But if the actual bad debt is more than the provision, it will be calculated as expenditure. So in this case, it was more than the provision. So that's why we are calculating it as expenditure in the trading profit and loss account. So when you do that, you put them together, it will give you this. You deduct it from this amount. We are left with 247,050. Now, there is what they call the rent receivable. The rent receivable is the amount of money that they were supposed to receive for the renting of the asset from outside. So it was estimated to be maybe 4,500. But actually, the period where the rent was paid, it shows that the amount that was actually received by the company is 2.5. So we have to reduce it. It means the rent due, rent receivable due must be, okay, we add it to this amount because this is the income of the company. So when we add it, the operating profit becomes 249,550. Then we have to reduce debenture interest due and also the tax. What is debenture interest due? Debenture interest due is the amount of money that they were supposed to pay as a result of the long-term loan, but they didn't pay. So it is due. We have to reduce it from their profit, which is 2,800. Then they pay tax of 8.5. So when you reduce it, it gives you 238,250. And you have to add the profit, the carriage forward profit on the opening day of the year. For example, on the 1st of January 2021, it shows that the question explains that there was a carriage forward profit of 3,800. So you have to add it to this current profit to give you the profit of the company on the 31st of December 2022. So it's 242,050. This profit will be used to open the next year, and it will become carriage forward profit, maybe for 2023. So that is how we build our trading profit and loss account. So we want to build the balance sheet of that same question.